Chapter 7. Liquidity Pools and Hidden Orders, the Invisible Forces of the Market. Liquidity pools and hidden orders are the unseen currents driving price movements in financial markets. Understanding these invisible forces is essential for mastering institutional trading. Identifying hidden orders isn't straightforward since they are, by nature, invisible. However, experienced traders and algorithms use indirect methods based on price behavior, volume, and order flow. Here are the most effective ways to identify hidden orders. 1. Repetitive absorption at a price level. What to look for. Price hits the same level multiple times with significant volume but doesn't break through. Explanation. Hidden orders are absorbing incoming market orders without moving price significantly. Clue. Large market buys, sells are filled, yet price remains stagnant. Manner 2. Unusual time and sales activity. What to look for. Repeated prints of the same price with high volume, but no movement. Explanation. Hidden liquidity is matching those orders, possibly from an iceberg or a full hidden order. Time and sales window shows big prints without price reacting as expected. 3. Price stalls near support resistance with high volume. What to look for? Market shows increasing volume near key levels, but price won't break. Explanation. Hidden buyers, sellers may be present, quietly defending the level. Clue. High volume candles with long wicks but small bodies. 4. Footprint chart or order flow analysis. What to look for. Delta imbalances, more aggressive buying selling without price progress. Explanation. Hidden orders are soaking up aggressive orders. Clue. Negative delta with bullish candles or vice versa. 5. Iceberg order detection tools. What to look for. Platforms like Bookmap, Sierra Chart, or ATAS show sudden repetitive order sizes being filled at one price. Explanation. Part of the order is revealed, but larger size remains hidden and keeps reappearing. Clue. Repeated partial fills from the same level. 6. Anomalous slippage or execution patterns. What to look for. Your market order fills faster or slower than expected with little price impact. Explanation. You hit a hidden order that was resting at your price. Clue. Unusual fill behavior during low volatility. 7. Level 2 and DOM, depth of market, behavior. What to look for. Price bounces at levels that show little to no visible resting orders. Explanation. Hidden liquidity is present at that price, absorbing orders silently. Clue. Lack of visible depth, but strong reaction. What are liquidity pools? Liquidity pools are large clusters of buy and sell orders concentrated at specific price levels. These pools act like magnets, drawing price toward them as institutions seek to fill large orders efficiently. Unlike visible order book levels, many liquidity pools are hidden, known only to the institutions that created them. So 7.2, the purpose of liquidity pools. Institutions create and target liquidity pools for several reasons: efficient order execution, avoiding slippage and getting better average prices, reducing market impact, hiding true order intent to prevent front-running, absorbing volatility, providing stability during periods of intense market activity, triggering retail traps, manipulating price action to capture retail stop losses. 7.3 Types of liquidity pools. Visible pools, clearly present in the order book, often at round numbers or key levels. Hidden pools, concealed within dark pools or iceberg orders, invisible to retail traders. Psychological pools, formed around significant psychological levels like whole numbers. Stop loss pools, areas where retail stop losses are concentrated, creating high liquidity. 7.4 Hidden orders. The institutional stealth tool. Hidden orders are a key component of liquidity pools, designed to mask true order intent. Iceberg orders, large orders broken into smaller, visible pieces with a hidden bulk. Dark pool transactions, off-exchange trades that provide anonymity. Post-only orders, placed to avoid immediate execution and reveal minimal intent. Layered orders, orders stacked across different price levels to create false signals. The mechanics of liquidity pools. Liquidity pools act as gravity wells in the market, pulling price toward them as stop hunts. Large players sweep through known stop levels to capture liquidity. Order flow absorption. Institutions absorb retail orders to fill large positions. Momentum creation. Large trades spark volatility, creating price swings. Support and resistance. Key levels attract liquidity, acting as barriers to price. 7.6 Spotting liquidity pools in real time. Recognizing liquidity pools in real time is critical for institutional level trading. Volume profile analysis. Identifying high volume nodes where liquidity is concentrated. Order flow software. Tools like Bookmap to track hidden orders and large transactions. Price action analysis. Spotting sudden reversals and aggressive order fills. Time and sales data, watching for hidden absorption and aggressive spikes. 7. Trading with liquidity pools. To leverage liquidity pools effectively, hunt for stop levels. Use stop hunts as entry points for larger moves. Fade the extremes. Trade against aggressive liquidity grabs for quick reversals. Align with institutional flow. Trade in the direction of large liquidity imbalances. Use psychological levels. Monitor round numbers and key levels for hidden pools. Thank you for watching my video. If you found this content helpful, don't forget to like, subscribe, and hit the bell icon so you never miss an update. Your support means a lot, and it helps me create even better content for you. See you in the next video.